What's going on? My name is Amy. Welcome to the channel. I am a beginner day trader in month 5, and we're actually getting close to month 6 here, end of April almost. I thought to kind of cover what I believe are the best times of day to day trade. Now, I will put it out there that I think one of the keys to making progress and getting better at your craft is being flexible and being open and willing to adjust and shift and change. So for example, my first 2 months, December, January, of just doing day trading, I was trading the pre-market, and I would buy stock in the pre-market, and then I would wait for the opening bell to kind of, grab that surge of volume and take my profits. And it worked very well. But the market was entirely different, and it was much more bullish, obviously. Right now we're in a very volatile, crazy market. I don't know anymore if we're in a bear or what we're in right now. It doesn't feel very bullish, but it's not necessarily a bear market either. But anyways, what I was doing back then was buying, but not using a stop loss. I was only putting in a take profit order. And when things got risky and volatile in, end of December, January, I was like, whoa, I'm taking losses, trying to exit out of stuff manually, and I decided that because I couldn't actually put in a stop loss during the pre-market, that it was better for me to not trade it, because I didn't feel confident at that time, and really I still don't, that I would be on my game about exiting trades manually when I was supposed to with a mental stop. So I decided that I would trade the open. So basically wait, see what was happening right at the open, jump in right at the open, first 5 or 10 minutes, taking trades. And I was doing that pretty consistently through like March and into some of this month. But then it kind of dawned on me, and I thank the people watching the channel who commented this. A couple people mentioned like, hey, with the markets being all crazy, I'm trading at a different time. And, some people mentioned like an hour after the open, 2 hours after the open, even 3. So what I decided to do was just play around with different times. And basically what I'm telling you is there's not necessarily one time fits all. Like if I was to say, yeah, trade the open like I do, that might not work for you and your strategy. And for me right now, I actually haven't traded much of the open lately. It's been like maybe 1 in 5 days I might actually trade the open, because I was wanting to try different times and see, okay, are the moves cleaner? Is the setup there a little bit better? I like quick momentum scalp moves. I like to be in and out of my trades, 30 seconds to like 3 or 4 minutes. 5 minutes feels long. There's been some I've been in for 10, and that feels extremely long for being a scalp trader. And yeah, I just lately have been trying different things. So what I feel like kind of has worked is, the last couple of times, I'm looking at my trading journal here, last couple of times I did trade the open, and to be fair, I'm not always putting the time like I should be in my journal, but there was some times recently, like Tuesday this week, what other days? Yeah, actually Monday and Tuesday I actually did trade the open, and yesterday I regretted it because I was like, oh, it's back to the same old shenanigans, where stuff was like choppy, or it was, I shouldn't say choppy, it was whipsawing. It was just like, it could be going one direction really strong 1 minute, and the next minute the complete opposite. So yeah, and just looking at my results, I was profitable on Monday. I technically wasn't profitable on Tuesday if you looked at just the trading the open. But yeah, I was kind of like, okay, well, what else might work? And last week I tried trading an hour after the opened, and yeah, I think that one, it went okay. I kind of felt like after the first hour, the volume starts to dry up a little bit. So for momentum moves, not necessarily the greatest. It used to be, I feel like when we were more in a bull market, It used to be the first 2 hours. You could pretty much like, yeah, you see momentum, you've got volume. Of course, that first 30 to 45 minutes is the strongest, but what I had noticed lately of trading, an hour after, so like 10:30 Eastern to, 11:30, it's like a toss up, unless there's some news or something coming out. And then there was some days I was kind of just randomly sitting down at the computer. Like one day I thought I wasn't even going to trade, and for whatever reason I decided to sit down, and it was like in the lunch hour of East Coast. So I'm on the Pacific Coast. So for me, it was like somewhere around 9:15 a.m. So like 12:15. And I caught this amazing practice session it was for me on that day. And I just had back-to-back wins, and I was trying new stuff, and it was working out. So I was like, I kind of just sat down randomly, but now I'm making a mental note that maybe this is a good time of day to trade. So what happened today? Today I actually traded at 2 different times, and I don't usually do that, but this morning I was trying a little bit after the first hour. I said, let's see what's going on. And, I took a couple trades. I'm not going to go into it on this video. I'll share on the next video. But, I ended on profit, but it felt like there wasn't much to get from the market at that time. This was like 10:45 a.m. Eastern. And then I said, you know what? I even wrote it in my notes here. I was like, we'll come back to the charts around 9 a.m. So 9 a.m. Pacific, 12 Eastern, I'm out walking my dog, and I'm like checking the time, and I'm like, oh, it's 9 a.m. So I was like, well, give it a few minutes. I'll come back. There's a whole lunch hour here. So I think I sat down like around 9:10, and is that right? Yeah, maybe like 9:15. I sat down, and I was like, kind of felt like at first, either I'm too early, people aren't really, scrambling at the end of the lunch hour. And I took a trade, and it was kind of like break even. And then I was like, and I had like a time in mind. I was like, if I'm not really seeing anything worth taking, that's my setup, I'm probably going to walk away by like, it would have been about 12:50 p.m. And then I thought to myself, what if the lunch hour is like trading the close? And I'll get into trading the close in a second. So I thought, well, let's wait. Let's just make sure that last 10 minutes, like nothing crazy might happen, right? And I was right. Totally was when there was a sharp move on the NASDAQ. I was watching the QQQs and took a beautiful trade. And I was like, okay, game on for the lunch hour. I think it's best to kind of sit down and see where things are at like 12:30, so that gap 12:30 to 1 Eastern. It's not every day that it's volatile or moving, but you can kind of, probabilities wise lately with the news and the tariffs and all the craziness, now we're in earnings season, you can pretty much bet on there being some stuff happening. So yeah, that was another adjustment to, not only the time, but I was looking at, I've been trading Tesla. If you watch any of my videos on the channel, I love trading Tesla via ETFs, TSLQ, which is the short, and TSLR, which is going long. And, I found out by looking at my stats, looking at my history of trades, that I was doing a lot better on shorting it. And I think one of the reasons for that is the price point on TSLQ. So TSLQ is about $40 some or $50 some a share. And TSLR was like $12 to $13 a share. So what that means for me as a scalp trader is that there's a higher chance of me grabbing a scalp in the 10 to 25 cent range than there, with the TSLQ, than there is with TSLR. TSLR movements, the average trend range in like 5-minute candles is 5 to 8 cents, right? So I'm sitting there waiting for some of these trades to play out, and then it's only giving me like 10 cents, right? So anyways, today I was like looking at the Qs, and I realized that, and this is kind of yesterday too, realized that if I traded TQQQ, which is long on the Qs, long on the NASDAQ, or SQQQ, which is shorting it, that both of those ETFs are in the 40 some dollar range. And I was like, ooh, like that's kind of my sweet spot for the stop losses I'm using, which tend to be 15, 20, 25 cent stops. So that kind of helped me with the time of day, knowing I have these windows of opportunity. Also realizing too that a lot of action happens just before the hour or just before the half hour. Have you noticed this? Like, look at the clock. I noticed this way back when I first started day trading and I was trading Tesla. It was like clockwork every single day, right before the first hour of the market, right before that 10:30 mark, there would be like these algorithms kicking in. And a lot of times they were selling off. It was like Tesla would have some sort of rip that morning and it was selling off. So I knew better than to, take a trade to the long side at that time. But watch this, like watch the half hour marks, watch the hourly marks on the clock, and you'll see what I mean. You'll see the algorithms start to kick in those last couple minutes up to, the dot, like up to 7:30, or excuse me, up to 10:30, 11:30, whatever it might be. And with trading the close, which we'll go back to now, yesterday I traded the close. I also traded it, I think it was Thursday afternoon, because Friday was Good Friday, Thursday afternoon last week. And I had a win doing it last week. I've had also swing trades that I've been able to exit with a good profit by waiting them out till the end of the day, when a lot of times you're getting moves to the upside. Doesn't always happen. Sometimes it's like everything's selling off at the close, but I think there's just a good chance for volatility. There's a good chance for good volume. So yesterday I traded the close, and you can go back and see that video. It says traded the close on the thumbnail. But yeah, basically caught momentum, caught volume in the last, what was it? I'll tell you right now, the last couple of minutes. Well, I took a loss. I took 3 trades. So I took one at 3:14 p.m. yesterday. I took another trade at 3:23. That one was a loss. And then my final trade, I want to say this was about 3:45. And I was only in it for a couple of minutes, and that one was profit. For some reason, I forgot to write the time down on that. But yeah, basically that window, and I think if you get out just before the last couple minutes so that you make sure you have the liquidity for whatever you're buying and selling. Because one of the concerns I also have with pre-market is these ETFs that track the Mag 7, the indexes, whatever it might be, that the liquidity changes in the pre-market and the after hours, meaning that you may pay more in the spread, right? So let's say, for example, TQQQ is $40 and a spread during active hours, it might be like 40 ask, 40.02 or 03, on the bid. Or excuse me, that would be backwards, but whatever. There's a 3-cent spread, right? In the after hours or in the pre-market, you might see it like 8, 9, 10, 11 cent spread. So I like to make sure that if I do trade the close, I am definitely out of that position by like the last 3 minutes, maybe the last 4 minutes before the actual closing bell. Just keep that in mind that the spread will change. So anyways, guys, my point being is, clearly I'm all over the place trading different times, is that first of all, you find what works time-wise for you in your particular schedule. I'm an entrepreneur. I have the ability to do this different times, different hours of the day. Make sure it aligns with that. Also making sure that you know what kind of trader you are and you align that with the time of day. So if you're the kind of trader that's like, hey, I like to be in these moves for a couple of hours, wait for it to get up to a certain level so I can maximize profit, it's probably not as important for you to worry about volume and liquidity. You can kind of jump in your trades when you feel like the setup is there, or you can put in limit orders, whatever it might be. But for someone like me, I'm scalping, I'm looking for sharp movement, sharp candles, engulfing candles, I should say. I have to kind of be patient and wait for those to show up, and I need to be like on my game when they do. I gotta be like, okay, here we go, right? Jump. And then also be quick to exit if it's gonna go against me, because my stops are very tight. So it's not so much that I'm exiting in fear of losing the money or anything like that. It's more so I've been able to minimize risk and actually minimize my losses and stay in the profit zone by manually exiting when I have my 3 strikes rule, which I've talked about in other videos. Basically, I look at 3 different indicators with my chart. If all 3 are, check, 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 that's it. I exit, whatever, before the stop. Because at that point, it's like, this trade is going against me. And one of them is a time factor. If I've been in the trade for 90 seconds, kind of like at 60 seconds, I'm like, 90 seconds, pretty much like time to bail if it's not going in my favor. Second thing is my stochastic oscillator down here. If that sucker is the signal line crossing and it's going down and I'm trying to go long, that's another no-no. Third thing is the price action. If I can see it struggling in the candle, if I can see it struggling to make new highs or make new lows, and then, I've got like kind of a stair-stepping action in the other direction, then it's like, okay, 1, 2, 3, time to go, right? So that's kind of what works for me as momentum scalping. But yeah, guys, I just want to put it out there, be open, be flexible, try different times. Like, again, thank you to the commenters on the channel who shared, hey, I'm trying different times because it's been volatile. I think that that's a really good reason to test and experiment, and maybe just trade with smaller size until you feel confident, like with a new time frame, and just see how the market behaves. But I think that that's something we should all consider doing right now is, hey, maybe it's time to switch it up, right? And then, just find what works for you, and heck, trade 2 times a day. Like, I was kind of stuck in this mentality before when I was trading with larger size, of course, that I could only trade 1 time a day, and it's like, okay, that's it. I don't want to risk, too much. I keep my winners, or I don't want to lose anymore. But because I'm trading such small size right now, it's not a big deal to try different times of the day and just keep practicing. So that's all I got for you. Check out my day trading resources down below if you want to know how I've been able to learn thus far this amazing career path, day trading. And you can just put in your email and get access to my Google Doc, which I do consistently update with new resources that I found along my journey. So take care, guys. I'll see you in the next one.